So there's a lot of unwillingness now by capital to even start a business in this country. So is it any wonder that people are rushing out of the UK, not just physically, but capital wise? And that's what the bond market is telling me. And yes, it's really fun to watch the tweets back and forth. Elon Musk, and then what's his name? Keir Starmer replied yesterday. He was speaking at a hospital. He said Elon Musk is lying and so on. Tuesday, January 7th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, it's much more interesting to follow political intrigue, scandals, than to follow money, right? But I think it could cost you a lot if you're not following the money. Yes, Elon Musk has lifted the veil or unmasked the British establishment as it pertains to some things that have happened here in the past and probably are continuing to happen. And my purpose today is not to talk about that, because we cover here on this channel the monetary system and how, the best ways to protect your savings. So I'm going to come out on a limb today and say that the bond vigilantes are Keir Starmer's biggest worry, really. Not Elon Musk. And we're going to look at that briefly today, and I'll explain to you what that means. But before we do, I like to talk about your bank account. And I've spoken about this many times. And of course, I always get new people following. Sometimes you start following other topics. So I want to refresh a little bit about what banking is all about and how your money, how safe your money is in the bank, not just in terms of having it be taken from you, just like people had in Cyprus, or like people had in Iceland, or if a bank fails and you don't get your money back, right? It's also to do with the debasement of the currency. But I saw an interesting post on X, or a tweet on X, by someone called Rob Moore, at Rob Progressive. He's an entrepreneur, author, and philanthropist. So he said the following: my friend tried to withdraw £20,000 from NatWest Bank, and their response was shocking. For 30 years, my friend has been a loyal customer. He called to withdraw the money, and they said no. He went into the branch and asked face-to-face to withdraw the £20,000, and they asked, "What is it for?" Well, they always do. He said, "None of your business. It's my money." They said, "Unless you can tell us exactly what the money is for, you cannot withdraw it." This should shock and terrify you. Your money isn't even yours anymore. Well, if you've been following me for a long time, you know that I've been telling you this, that first of all, it's not money. It's currency you have in the bank, or you have a deposit. Real money, of course, you need to hold it, be it silver or gold. This is money, right? But anyway, more importantly, though, when you deposit or allow your employer to deposit your wages into a bank, or you go into a bank and you want to deposit some so-called paper money, it's a loan. You're making a loan to the bank, even though you might be putting it in a current account or a checking account. It's an unsecured loan. And the other thing the bank does, if you put £1 in the bank or $1 in the bank, that will become a reserve that they can use to lend further. And then they lend it many times over. And that, of course, is called fractional reserve. So legally, it's not your money in the bank. And legally, the bank can ask you anything. And it's not surprising. And why? Well, because the banks, they're part of the this fraudulent fiat currency system that we've had. Well, here in the UK, ever since the beginning of World War One, I would say it's been downhill. In the US, it's been a little better, but not that much better. And what this system does is just create a massive amounts of debt, and they have to keep inflating the debt. And you also lose the purchasing power of your currency. But right now we're at a juncture where the debt is so high, not just the public debt, personal debt, but corporate debt. The debt is so high that they don't want you to take anything out of the bank, because if a lot of people start taking out their money from the bank in cash, taking it out of the system, they won't have as many reserves to back the system. Everything will implode. It's like a bank run. They're trying to discourage a bank run. And aside from that as well, yeah, it is for control, but that's the excuse they give you. They want to protect you, make sure that you're not going to take the 20,000 and give it to a scammer. But that shouldn't really be any of their business, because it should be your money. But legally, it isn't. So what is the best way? How can you protect yourself, protect your savings, take it out of the bank? Well, I would say is, and I've been telling people, is to get real money outside the system. Yes, have it in your possession. Have most of it, I would say, in a private vault, because things are becoming more and more unsafe out there. Have a dirty man safe, which I spoke about yesterday. But the other thing about gold and silver is that they've been maintaining their purchasing power. And why is that? Well, it's very simple. I spoke about this yesterday as well. They've been inflating the money supply. It's the simple law of supply and demand. So I would say to Rob Moore, this is not shocking. If you'd been following us here, following Monaco 64 on this channel. And I'm going to give you an example of how not just safer, but advantageous to your purchasing power keeping gold has been, or stacking gold for the last 23 years or so. So back in 2002, here in the UK, if you took 10,000 pounds, you could have left it in the bank, of course. It would still be worth 10,000 now. You might have gotten some interest on it, so it would be worth a little more. But instead, you could have bought 200 of these sovereigns. Well, and sovereigns are coins of the realm in the UK, as are Britannia's. And the gold sovereign, of course, is legal tender as well. And just to help you along with it, one sovereign is 0.2354 of a troy ounce. So that's a really important number that you need to know, 0.2354. So if you take the price of gold at £1,000, for example, a sovereign is going to cost you 235 pounds roughly. So that's why it's important to know that number there. But in 2002, you could have taken 10,000 pounds and you would have gotten 200 of these. The price was at 212 an ounce. Yeah, that's how low it was. So what would that be worth today? Well, the sovereign is worth 495 pounds today. So 200 of these are now worth 99,000 pounds. Yes, from 10,000 to 99,000. And yes, you could have put 10,000 in a pension, but look what's happening to pensions now, right? With the inheritance tax coming to bite. No capital gains tax so far for sovereigns. I don't think they're going to impose any capital gains tax on gold. And you might say, well, that's a long time, 23 years. Yes, but let's go to end of 2015 when I started this channel. And I started talking about these things. Well, if you took 10,000 pounds, you would have been able to buy 60 of these. And 60 of these today is worth just under 30,000 pounds. So that's worked really well. Yeah, less time. And that's the secret about savings. You need to do it for the long haul. And that's how it's going to help you. Of course, not with fiat currency. You shouldn't do it, of course, because it's always going to lose value. Well, and nowadays, for 10,000 pounds, you're only going to get 20 of these. So I would say that I would be willing to to bet that in 10 years' time, 10,000 pounds will maybe get 10 of these, but I would say it's probably going to be a lot less, maybe 5. And what is that showing us? Well, it's showing us that our currency is just losing value at a rate of knots. Yes, it's taken time, but the trend is down. But that is normal for fiat currencies. So with that now, I'm going to move over to Keir Starmer and the battle he's had with Elon Musk and also Nigel Farage. All I'm going to say is that I'm not sure about Elon Musk, about his intentions about other topics. But as it pertains to these gangs here in the UK, I think he's 100% correct. I mean, if you're not going to protect children, then you're not really worth anything, I would say, especially if you are running the country, if you are in a position of power like Gordon Brown was and like Keir Starmer was. So I'll give that to Elon Musk. But as I said, I think Keir Starmer needs to be worried about the bond vigilantes. And who are the bond vigilantes? Well, up until the early mid-90s, when interest rates were still quite high, I think it was also James Carville, who was an advisor to President Clinton, who said, if I could choose when I'm reincarnated what I want to become, he said he'd want to become the bond market because they're so powerful. But it's weird because in the early 90s, mid 90s, the best place to probably one of the best places to put your money would have been the bond markets, because if you look from afar, the bond market was actually in the beginnings of a huge bull market, which means that interest rates are going to continue to go lower for another, well, I don't know, another 20 years almost. And they did, and that helped bond prices. So the bond vigilantes, who were the people who kept governments in check about inflation, deficit spending, borrowing, they went into hibernation, but they're coming back now ever since 2022, I would say. And if you look at, for example, the 30-year gilt yield, which is the 30-year government debt from the UK, you can see that we are at levels that haven't been seen since 1998. And having worked in the markets and not only having used fundamental analysis, but also technical analysis, I can tell you that this yield chart here looks very bullish. And you might think, well, that's good for Starmer. It's bullish. No, it's bearish for him. And why is that? Well, because if yields go up, bond prices go down. It will cost the government a lot more to borrow. And the UK did something that worked really well up until 2022 in the bond bull market. They were able to, the UK Treasury, specifically HM Treasury, they managed the debt quite well because the duration of the debt is a lot longer than most developed countries. It's around 14 years. And with yields going down, even long-term bonds, that worked really well. But now that it's reversed, it's going to be a huge problem for Keir Starmer and his government. And who are these bond vigilantes? Well, they're just international capital, domestic capital, and they don't care a lot of times about politics. They care about their money, if it's going to be safeguarded. And I think they're concerned about the UK and what Labour is doing in terms of economic policy. And the same probably would have happened under a conservative government. They weren't that much better, but I think this Labour government, they're even worse. So what are the policies that are creating this? Well, in a nutshell, they think that they can grow the economy by putting more regulations to do with the climate question, right? That we know, well, in my opinion, is exaggerated. And ASCAM, we know that it was the bankers like the Rothschilds and Rockefeller who really build up this environmental narrative and industry starting in the 70s, 80s, and 90s. And why do they do that? Well, if we have a problem that's worldwide that affects everyone, the bankers will have more control over you through international organizations. And do you really think the Rothschilds and the Rockefellers and other trillionaire families really care about you? Why do you think they're trillionaires? Because they've looked after themselves. So unfortunately, it's not just the Labour Party, but the Conservatives as well. They're playing along with it. So they're making everything more expensive for the public in the UK because they want to impose this crazy net zero agenda. Of course, the rich can always offset their carbon expenses. We can't. We have to pay for it. The other thing they want to do, they think they can grow the economy by taxing the private sector and by enlarging the public sector, the bureaucracy. That's completely wrong. And yeah, they think they can grow the economy. And at the same time, they're punishing employers. They're going to punish the farmers from next year with the inheritance tax. They're going to punish not just the farmers with inheritance tax, but also some family businesses that were exempt from it. So there's a lot of unwillingness now by capital to even start a business in this country. So is it any wonder that people are rushing out of the UK, not just physically, but capital-wise? And that's what the bond market is telling me. And yes, it's really fun to watch the tweets back and forth. Elon Musk and then what's his name? Keir Starmer replied yesterday. He was speaking at a hospital. He said Elon Musk is lying and so on. Yeah, it's fun to watch that. But don't forget, people, you need to look after yourself and your savings and your family. Know that they want us to stay focused on this while our hard-earned savings are not only like blocked from us, like we saw Rob Moore talk about, but the purchasing power thereof as well is stripped away from us. So you might be asking, what is the best way and how do you buy gold? Or you already buy gold, which is a good thing. Well, I've always told people, go online, just like I did many years ago, and search and try to find the best place to go. The dealers with the longest track record. And many of them, you might be able to call them and talk to them, and they'll give you advice. Or you can choose the dealers that I vouch for, and I have for the last, 10 years at least. Not 10 exactly, but about 8 years since I've been making these videos. Here in the UK, of course, it's Gold Investments. They've been in business since 1981. It's a family-run business, and if you call Oliver or Simon Temple, they will go through what you need to do and what the best coins or sometimes bars are to buy. And they will give you a better, slightly better deal as well if you mention Monaco 64. And in the US, I've been affiliated with Miles Franklin. And you can call them as well and ask for advice. And they've also got usually specials, weekly specials that you can look at. If you do want to talk to them, all the details are below in the description. So let's quickly look at the markets then this morning, see where they are. We've got spot gold at 26.42. That's up $5. So the high's been 47 and the low's been 32. We've got silver at 30.16. That's up 22 cents. The high's been 30.22. The low 29.85. And be aware that I always cover the spot price, not futures price. I know the futures price is higher at the moment, the front month. The stock market indices are pretty much unchanged. They're down slightly, really not much to write home about. The pound and the euro are slightly firmer versus the dollar. They're up about 0.25%. The oil prices come off a little bit. WTI crude is down about 0.5%, 72.88. Now let's quickly look at the bond markets here. The 10-year yield is at 4.622. It's unchanged, but it's still relatively high. It's 100 basis points higher than in September when the Fed started cutting rates. What about the UK bond market? Well, it's not getting any better. As I said, the 30-year yield is at 5.25. The 15-year, which is close to the average duration of UK debt, is now approaching 5%. It's at 4.97, and I'm sure the Office for Budget Responsibility, which is supposed to be an independent watchdog that helps the Treasury make its forecast, I'm sure they haven't forecast rates to be that high. I think they were thinking more of long-term rates around 4 or even below 4%. So it's going to be a problem for Keir Starmer. And we're going to keep a very close eye on these yields because I think they could be ready to break out to the upside. And that's bad for not just for Keir Starmer, but for everyone, for the economy, for homeowners as well, because it will affect your mortgage rates. So with that, I'm going to wish you all a very good day. Take care. Bye.